Welcome to Inside CBN Now, where we talk about the policies of the Central Bank of Nigeria that affects our daily lives. Whether you're a business owner, a student, or just curious about the economy, we are here to explain the numbers and decisions in a clear and simple way. I'm Victor Akpan. Today we're talking about understanding monetary policy, and my guest is Mr. Ahmed Bolaji. He is a multi-certified financial professional, a chartered accountant, stockbroker, and tax practitioner. Hello, Mr. Ahmed Bolaji. Welcome to the program.
Thank you, Victor. Just doing good.
All right. So, understanding monetary policy. How can you explain the Monetary Policy Committee and what it does?
All right. So, looking at the Monetary Policy Committee in Nigeria, so it's majorly carried out by the CBN, and it comprises of about 4 members, of which the CBN governor serves as the chairman of the committee. And of course, when you look at what they do, they meet regularly every two months, towards the end of that particular month that they are meant to meet. And as at their last meeting held about 2 weeks ago, which is so they were able to retain the key metrics, looking at they are the one that determine the monetary policy rate, the asymmetric corridor, the liquidity ratio too. So I mean, they all come together to drive, and or let me say they serve as the driver of the economic steering wheel, basically.
All right. So, what is the monetary policy rate? And how does the Monetary Policy Committee determine when it goes up or down?
So now when you look at the monetary policy rate, so that's like the outcome of the monetary policy committee meeting. So basically when you look at the MPR rate, that's like the benchmark interest rate. Say you want to loan someone, you want to buy something in the market, that speaks to how much should I charge, considering the interest rate that the bank are going to lend me at. So when you look at how they decide when it goes up or down, because it's a rate, it can either go up or down. So when inflation is high, like I mean, speaking to inflation figures, when inflation is high, the MPC may, or they might look at increasing the MPR to make borrowing more expensive. And when you look at inflation, what does inflation mean? Like there's too much money supply in the economy, and they need to look for how can they bring it down. So to bring it down, they have to increase the MPR, which makes it more difficult for you to come out to borrow money. And then when it's high, you think twice before you say, oh, should I go out there to borrow? I mean, is the cost favorable for me? So that's speaking to the aspect of when inflation is high. But when the economy is slow, they might also, people are into spending and the like, so they might want to bring the rate down so as to um support, or let me say, so as to kind of encourage people to come out to borrow at a cheaper rate.
All right. So, the asymmetric corridor is another key metric determined by the committee. Can you tell us what it means?
The asymmetric corridor, so that's literally like a conversation between the central bank and all banks in Nigeria. So looking at the last meeting held by the MPC committee, so they left it at what it was, making it at plus 500 minus 100. So it's literally speaking to the rate at which the central bank borrow money to the banks, and the rate at which the banks also lend money to the central bank. So when you're looking at plus 500, currently the MPR rate is 27.5. So plus 500 means that whatever rate that the CBN would lend to the bank, it will be at 27.5% plus that 500 basis point, which is 5%, plus 5%. That's 32.5% whenever the CBN wants to lend money to the banks. And of course, when the banks come to lend or save money with the CBN, that's speaking to the aspect of minus 100. That's minus 100 basis points. That 100 basis point simply means 1%. So that means banks will be saving money with the CBN at 27.5%, less that 1%, which is 26.5%.
Cash reserve ratio. What does that really mean for banks and for regular people?
Okay, looking at the cash reserve ratio. So whenever a client or a customer deposit money in the bank, so it's expected that at least 50% of that money that the customer deposits in bank is left in the bank, because the funds are just made available to the bank, and banks literally have discretion as to what to do with those funds. So the CBN now makes it compulsory that, okay, at any point in time, whenever a customer deposits 10 naira, at least 5 naira, that which is 50%, 50% should be with the bank and nothing should be done with it.
All right, so how does the liquidity ratio work?
Okay, so looking at liquidity ratio, it's like the minimum percentage of a bank that must be easily available in cash. So, I mean, it's more or less like emergency fund, bank emergency fund, like whatever is going to happen to a bank, it must be ready to, attend to that emergency at any point in time. So that fund must be made available. So that's speaking to liquidity ratio. How easy it is for it to convert any of its available cash to available asset to cash.
So how does monetary policy decisions affect things like the price of goods, loans, and even rent?
Okay, so when you look at, so it's two-way. Whenever the MPC committee decide to increase the MPR either up or down, when they increase it up, basically loans for businesses and individuals that usually go to the bank to lend money at a particular rate, say 25 27.5%, now goes to the bank to lend at a much more higher price. So that's to say, whenever the MPC decide to increase the MPR, loans for businesses and individual becomes more expensive. And of course, when businesses increase, have when interest rate becomes more expensive, and then businesses might decide to reduce borrowing, and when they reduce borrowing, it's slower investment opportunities, and of course leads to reduced job creation. So it's just like that downward trend whenever the rate is up. And of course, when loans are cheaper, businesses can now borrow more at a cheaper price. So there is like a lot of funds available in the system. And when there's like a lot of funds available in the system, the money follows prices, which also increase the prices of goods and services in the market. And of course, it's also lead to increase in rent and other essentials.
All right, so do global issues affect monetary policy decisions?
Okay, so yes, very much, because when you look at global events like wars, oil price changes, or supply chain disruption, these are things that can push up costs in Nigeria. For example, if global prices are up, global oil prices are up, right? The cost for fuel increases, transport prices also goes up, and of course, food becomes more expensive as a result of that, because at the end of the day, they all push costs to final consumer. And if there is war affecting trade routes or trade routes also, I mean, importing goods into the country also become more expensive. And of course, these are issues that the MPC consider before they arrive at a benchmark interest rate.
All right, in terms of monetary policy decisions, how do they give accountability?
It's just the member of the committee that come around to, they all sit together and decide, okay, this is based on market scan that they almost of course must have done before they arrive at a decision to whether increase or decreases. And looking at to as to who takes responsibility, of course the CBN governor takes responsibility for the decision of the MPC.
Yeah, so I said in terms of monetary policy decisions, how is accountability made? So who takes responsibility for the decisions?
So okay, now if we look at the economy, right? We have two policies that drive the economy. We have the fiscal policy and the monetary policy. So when we speak to fiscal policy, that's done by the government. That's like the executive arm. And of course, when it comes to monetary policy now, This is the sole responsibility channeled to the CBN. And of course, it's now left for the CBN to, come out and say, okay, based on their market survey and, the economic scan, this is what we've decided to come at.
Okay, so what are the tools available to the MPC to measure the impact of their decision made over the monetary policy matter?
So, just like I said, right, the tools are the first tool that the first reference they make is to the inflation rates. Most of the time, they wait for the outcome of inflation rate every month to see that, okay, what's the inflation rate currently in the country? What's it like? So that's like what they, consider before they, decide to like, okay, should we adjust this benchmark interest rate higher or lower? Of course, they also make reference to the exchange rate stability. Has it been, what's the value of naira over time within the last within the between the last minute and the current time that they are bringing out the outcome of the exchange? And of course, the gross domestic product, what's the GDP like in terms of the growth rate? What's it like in the last 2 months? Like just like I mentioned, they meet every 2 months. And of course, the next meeting should be around September 22nd and 23rd of 2025. Yeah.
All right, sir. So at this point of the program, we're going to go to the streets to ask Nigerians what they think about the responsibility of the Central Bank of Nigeria concerning this policy making as to how it
Have you
affects
borrowed
their
money
daily
from
lives.
the banks recently?
I've not borrowed money from the bank recently.
Yes, I have borrowed money from the bank. I haven't taken any loan from the bank or someone recently.
No, I've not borrowed money from the bank recently.
No, I've not borrowed money from the bank recently.
No, I have not borrowed from the bank recently.
Do you know the current interest rate?
The current interest rate for the bank is 2.90.
I've not borrowed. But there was a time, actually, I don't know, they sent a message like on my phone. Maybe mistakenly, I actually pressed the phone and I was credited. So, but I don't know, but I didn't really go through but later I went to the bank. So they said maybe there's an error that definitely there should be a list of, the procedure, like where you borrow money, the money being charged. But so I went there like, okay, let them, that I can pay the money back, but I'm not interested. They said no, that it has to be a 3 month giving back, like paying back of the loan. But at the end of it, I never know how much the actually is charged from the money.
I think it should be about 5% to 7% of what you borrowed, and it increases the more you delay the payments if you don't pay on time. That's what I paid and what I think about. But
Interest rate as at now is over 30% from commercial bank, yes.
Would you prefer to borrow money from the bank or from someone you know personally?
Someone I know personally, I don't mind though. Because our business now, we don't have big money. We can't actually run it. So if I see someone that has a friend, like a friend of mine that say she has money that she needs to, like, can I use the money? Why not? I prefer.
since that is not feasible, it's not feasible for you to borrow money or loan from someone than for you to go to the bank if you have that opportunity. Because we all know the situation of the country. For you to get money or loan from a person like you, it's not that easy.
I don't prefer borrowing from bank or borrowing from someone, but I think there are some cases that you can't be financially stable all the time. You have to borrow. But I think I'll prefer to borrow from someone I know than bank. If you borrow from the bank, it's at a cost. That is the interest rate. But if you borrow from somebody who trusts you, that have that credit, good track record or credit rating, it will give you interest free. And it is preferable to borrow from somebody who is not a bank. Are you getting it? I can give you a long time to repay, depending on the type of business you do.
Borrowing money from the bank actually has long processes, and trust me, they might start asking for collateral, and what if you don't have that kind of collateral to exchange for that loan? So I prefer borrowing from a friend, a family friend, because they understand your predicament and it tends to be easier.
It's not easy to pay a loan when you borrow it, but borrowing a loan from somebody who is close to you will actually understand you, when you are passing one or two trains and you are not able to pay on time. So that's why I prefer borrowing from somebody personally than going to a bank.
How easy is it for you to repay a loan you have taken?
My personal experience for collecting the loan from the bank is positive anyway. It's positive because I know I know the terms and conditions of the loan before I venture into it, before I collected it, before I applied for it. Then I know the rate which they will use to deduct it. And I also know that the deduction will be spread throughout the 12 months. And it comes easier for me.
Number one, I won't even borrow loan because I know their interest rate is high. If I don't know how to borrow and I don't know I'm going to repay if I borrow it, so I don't think I want to even borrow the loan.
It's never easy to pay a loan back because how will you pay a loan that you were not financially stable at first, then you borrow loan to run something, then you got money back, you pay back the first loan, then you keep borrowing. That's a slave to getting loans and paying back. So you borrow, you pay back, you are not having anything. You are just paying, collecting. So it's the same thing. So I think that it's just universe. It's not okay to borrow. That's my own personal view.
Payment depends on the flow of income that's come from your business. If you have a business that has a very free income inflow, you'll be able to repay. But if your inflow is not prompt and it's not steady, to repay a loan now, it's very difficult because of all factors that attach with it.
Trust me, it's hard. I've seen a lot of people going into bankruptcy and a lot of stress paying a loan because you might not even know you don't even know the in and outs. And trust me, you need a lawyer to borrow a loan because you might not even know the in and out of the document you're signing and everything. So I think it's very hard for you to pay up a loan.
All right, sir, you've heard from Nigerians what they think about the Central Bank of Nigeria policy and responsibility in terms of understanding monetary policy and then the decisions that affects their daily life. So I'd like to have your take. What's your view on what they've said so far?
All right, so when I listen to it, I mean, most of them have talked about loan. And of course, getting loan comes at a cost. And what's the cost to the loan? That's the interest rate you have to pay when you come to meet me for assistance with respect to financial assistance. And that comes at a cost, and that cost is the interest rate. And of course, looking at, although they were just, rumbling around it, but it still all boils down to what is the interest rate in the country right now, which is the benchmark interest rate, which is, determined by the CBN. So it all speaks to, okay, interest rate is not, within the walls of CBN in Abuja. It's still what we all can relate to, and as it affects our day-to-day activity with respect to, how much we pay for prices of goods and services, and how easy it is for a business to get access to loan, and of course knowing well that comes at a cost, which is the interest rate. It's still people, you just have to chase them. There's no legal backing, there's no contract, there's no, something to substantiate that, okay, I owe the other person, compared to a bank where they have, a structured process. Of course, I heard from the, street, from one of the respondents that said that, okay, it would cost a lot to go through the due process of, getting a loan from a bank. Rather, they would rather go to someone because, oh, as far this is my friend now, just give me the money, I'll give you back later, that kind of thing. So it's more difficult to get back the loan in that kind of arrangement compared to when you go to the bank where you have to, fill the form. There's like a due process as to when you want to get the loan and the repayment. To a reasonable extent, I would say as an individual, we form the economy. So it still boils down to what's good for me, which process would I want to go through, and just as many of them as mentioned, I can say to a reasonable extent, 90% of the respondents were like, "Oh, I would go for someone I know compared to going to the bank." But in general scheme of things, not everybody can, handle the amount of money an individual would need. And of course, most businesses would most likely go to the bank. So for a business, it's not a matter of relative use of that fund. If it's like a huge capital investment, I would, rather want to go to the bank and, structure a legal process and due process to get the money I need for my business, compared to, oh, do I just need it to, get something when I can, instead of waiting like 1, 2, 3 months, I can just, oh, my friend, borrow me this, I just need to get this, and then I'll pay you back in the next 2 months, compared to now going to a bank, going through that long process, and then say, it's tiring already.
Thank you for joining the conversation, Mr. Hamed Abolaji, and we've been discussing Understanding Monetary Policy Committee. Before we come to the end of today's program, here is a quiz for you. Who takes responsibility for the decision of the Monetary Policy Committee? I take that again. Who takes responsibility for the decision of the Monetary Policy Committee? Send your answer starting with Inside CBN Now to the WhatsApp number 0809 682 2595. I take that again. 0809 682 2595. The first correct answer gets a prize. Thanks for being part of the program today. Until next time, I'm Victor Akpan.